Hello, everyone. Mike Arnold here, co-founder of Path Trading Partners, along with Bob Iacchino. Good morning, everyone. Thanks for the comments. I do see them. Good morning and happy long weekend, Wavy. Good morning, Patrick. Yes, Europe celebrating 8.6% inflation with a rally. The only thing that beat in Europe was core. Came in slightly better than expected. The other numbers came in very hot. Good morning, Amit. Good morning, Davey. Happy pre-4th weekend blast off in July. Good morning, Options 22. Okay, so I haven't said it in a couple days, really. If you're new here, please do consider subscribing, ring the bell, and hitting the like button. Longer-term viewers, please leave some comments and like the videos, and thank you as always. So, remember, long weekend. I'll still be up to do a wrap-up this afternoon. It will be on time, and I am going to be recording the podcast with Jim Iorio. So that will be dropping early next week. So I'm going to be recording that, then rolling into our market wrap-up. Good morning, Anissa. Good morning, Mickey. I keep gold driving, so risk on rally. I can't really call this a big risk on rally. It's more that metals, copper's getting beat up, because the recession stuff's really taking hold now. So and again, the commodities are going to pull back with everything. But they're still in a long-term buy pattern. So we shall see. By the way, do not ignore S&P Global Manufacturing 15 minutes after the stocks open. See if that contracts more closer to that 50 level. And then 15 minutes after that, we have ISM manufacturing with the component prices. So pay attention to that. So we could get a little volatility around with 15 and 30 minutes after the open. Good morning, Connor. So do not ignore that. Also, remember, it could turn into a interesting day with people, some larger traders not being at their desks, turning it into a 4-day weekend, or leaving earlier today and turning it over to the junior traders this afternoon. So it's going to be more tactile trading, pretty mixed at the open so far. Not much going on. I'll key off that open. By the way, the Fed Watch tool, the 75 basis points keeps dropping, continually dropping. Back towards that 50%, but the odds still favor that 75, and we are still in negative gamma. But unless something really interesting happens with those numbers, I'm not expecting much of a day, although we do have setups potentially. We got to trade the potential setups. Now because this is a 4-hour time frame, I really need a longer-term close above 38.2275. to then trigger this little double with targets 38.62, 38.81, 39.01. Remember, the rules to test out higher. If it's set on that time frame, you watch the close in that time frame, so preferably it'd be a 4-hour close. The next thing is to watch the higher or lower time frame for the close, so that would be a daily or a 1 hour above that level. And then up here, once you get really above around 38.30, you are into a clear path move with the breakdown zone coming about at 38.95. So that would be the full target. Now, if we roll back down, depending on where we go, on a longer term time frame, it might stay in there. But if we get really choppy down here and making bunch of bottoms or break through 37.41, that will probably be off the table. And then I'm targeting about 37.09 to 37.15 as the next major level lower. Could we just stay in this range, test some ends? Yes, without triggering a buy or sell. It could quite happen if there's no shock with the numbers coming out this morning. Good morning, Christoph. Good morning, Connor. Yes, happy Friday. Thank you, everyone, for being here. So if there's really nothing going on, it's a great day to call it, an early Friday. Especially if we don't get much action after the first hour. Don't put risk capital, from my perspective, at risk that you don't need to. Set yourself up for an extra day of a long weekend or focus on other things. Don't just This is not the day to take on a lot of risk, especially going into the long weekend with these current market conditions. By the way, cycles are at the top on the 4 hour, not closer to the bottom, but not yet bottoming. And by the way, what's interesting is if it were to close above this high from yesterday in the next couple days, it would trigger an aggressive entry %B buy signal. Do keep that in mind. With cycles at the bottom, we could see another pop higher, but there's really nothing to front run at this point. And that's why I'm being patient with the longer term setups. Shorter term, again, if there's nothing going on, sit on hands, enjoy a day off. So Nasdaq, you also have the potential double. I have it on the conservative targets, but if it were to push down, it'd have to be adjusted. So that would be a close above 11,685, 11,836, 11,912, 11,988. Other than that, if we do break down, I'm watching, and that would be sort of a breakdown with momentum, but we have this little support shelf here at the 12.5% harmonic, 11,303, so 11,300. You can always put on shorter harmonics if you want. Then my next major level on a breakdown would be 11,216 to 11,237. We did close below the 62.5 on this little move. So theoretically, statistically, we should still retest this bigger low area. The only thing that would change that on the short term is if we triggered that double. And I need a 4 hour or daily preferable close to trigger that. Not going to chase a bunch of stuff without really getting a higher time frame close. Dow trigger is above 39.65, 31.245, 31.384, 31.524 on that trigger. You can see we're sitting against this harmonic. I just want to leave that on there. I'm now, with this bigger correction, lowering it. So if we did break below 30,406, my next major area is 30,000, essentially 30,200. You got the cluster right there. Potential cups and handles on the hourly in all three indices. Your short-term thing, the only thing I'm really watching, if we into the open, I'm not trading that as a cup and handle because of this mess over here. The only thing I'm watching is if we get on the shorter-term basis, I'll just go over it on the S&P. A lot of things are trading with the same patterns. Above 37.90, then I'm running it to about 38.13. There's not a lot of stopping points above that. You can go above about 37.90.50, and then you're into this, but it is still choppy up here. It's something, yeah, you can trade it, just be nimble unless you're getting momentum bars. And off the open, you do have a little potential double, sort of. But if we did break below these low areas, I'd just be targeting back down here at this key support base, about 37.49 to 37.50. Again, to me, this is not a day to force stuff unless the numbers really come in strong one way or another and we get some decent trading. But then I'm not forcing stuff as we wind down through the day. Not at all. Russell, pretty much your same setup. We got all these doubles, which could, if we roll down and either retest or take out these lows, these doubles could be taken off the table again. 1726, 1749, 1760, 1781. This is not really an advanced clear path, but it's got not a lot of stopping points in there. That's the only thing that interests me if we do pop. And this isn't just for today, because we could end up with a choppy day and still trigger these next week. DAX, come on. DAX also has a little mini double. So if you're trading the DAX, it is valid. above 12,842, 12,965 with this gap right here. So you have the support ledge and the gap to here. So that could be a very interesting trade against the 4-hour rotation zone. But also to the first target is a gap fill, which is a magnet. And then you get 13,027, 13,087. To the downside, if it breaks down, it's really close to key support, about 12,550 to 12,601. If we did break below that, the next major level is into 12,279. Crude. Crude, what's interesting is with this little reversal up here. By the way, aggressive is a close above yesterday's high. Aggressive percent B entry is a close above 105.76, and this does qualify just barely for a potential double. So that's the only thing that gets me looking longer term for higher prices. But I have to wait for that to trigger either the aggressive pre-run pattern by taking the percent B only on a daily basis close and then trying to roll it into the double. Otherwise, we could just roll over again and retest this key trend line with that close below the 62.5. So it's sort of mixed messages. It still favors on this rally another rollover push, which doesn't invalidate that double yet. And cycles at the top trying to head lower and still moving down on the weekly basis. So it's important to check all your time frames and trying to hold this weekly rotation zone. So I'm not expecting, we do have, by the way, where's my stuff? There it is. We do, by the way, have the rig counts today. So do keep that in mind at noon Central. Let's just see. Copper, just wanted to touch on this. Copper breaking down, never got the buy signal and just rolling down. You can see into this. You got the little move coming with the sloppy with the rotation zone with the 4-hour, but the daily 8 pushing the price down. So I'm still watching for lower prices in copper. Really at this key level for me, the next key level I'll be watching for a potential reversal pattern is I have the harmonic on there, 347 to the 50% run up of 349. And you can really go off 350. But that's from the lows, the COVID lows to the high back in March. So that's going to be a very key area to watch for a potential bounce play, a short-term bounce play in copper. You have metals selling off, but this could be setting up a potential double in gold. So I'm really watching down here. Remember, we got the close below 62.5, and now we've hit that 87.5. So statistically, that is done. But it's setting up for a potential bigger reversal pattern if it does trigger. But today, it's pretty much hands off in metals from the bullish side at this point. Silver coming back down and this invalidated this potential double. And this is where I get very patient, waiting for the next key levels and a reversal pattern to then start resuming trading around a core position. Lighten up and then resume with a heavier position back when we hit some key levels or get a reversal pattern. But this is all trading off recessionary stuff at this point. I think silver's getting overdone, but it doesn't matter what I think. Where's the 62.5? That's going to be key, which is if we get all the way down to 1859. 10-year for Japanese bonds, which I'm checking on every day now because they're starting to get interesting, but there's no pressure in it right now. The yen still has a potential double top. The Swissy never triggered on the daily, running back up, but the still major potential double is still there. Bitcoin, some volatility. By the way, we do have a potential double bottom now, and we've triggered that potential double top on the shorter term basis and hit the first target. Still expecting, and this wouldn't invalidate this potential double bottom, but still expecting to test these lower price areas, 18,279. But if the double triggered to the upside above the 21,866, then it would shift to a short-term bullish play. What would be interesting if it also triggered with the daily rotation zone out of the way. So that's what I am watching, and that would just take it back to the weekly rotation zone. So those targets would be 23,500 roughly, 24, 313, 25, 129. Tesla, slight gap up today. Really, if we do run to the upside, I'm watching for the gap fill play to 697. There's not much going on. That'd just be a little break above the short-term ledge. So that's really the upside play. On a breakdown play, I start watching below 674, 675 area for a retest of yesterday's lows. Then if it did break yesterday's lows, 642. Oh, I didn't go over. Some of the best trading has been in notes, which is continuing the march higher to double. Potential double, remember, potential setups never have to trigger, which that one didn't. We came up, paused. You see at the harmonic cluster, and then have run through. Here's what I'm watching for now. This is where it's handy to trade multiple markets because you can go to where the great trading is, and right now it's some of the great trading's in some of these treasuries. My next target's higher, about 120. Then 120.18, 120 for another stop reduction, 120.18 to about 121 is where I'll watch for at least a short-term potential topping pattern, and that's into the weekly rotation zone. So those are and we still have this gap here, which is my very short-term target to this closing price of 119.27. Major support now on any pullback. Don't even have a great area to put on a pause bar yet, so I'm not doing that until we'll have one coming into next week. But my minor support, I'm just using 12.5% harmonic, about 118.27. Major with the crossing of the daily rotation zone. I'm going to watch with this prior breakout area, and you have a support area in here, but my first will be 118.06. Good morning, Lauren. Morning, George. These days, I look forward every day to the markets don't trade. Enjoy the holiday. It is one of those challenging market events. So, yes, if you can enjoy the holiday and not do anything, or if you just have to manage stops and targets, that's the way to do it. Dollar index, still the short-term double. The larger one turned into a triple, but the short-term double still intact with this rally up. And remember, we've hit this statistical return to the high area. But if we do break above these short-term highs, we still have the next harmonic target, 105.72. Then, what is it above there? 106.38. Let me take a look at the Qs. Then we'll wrap this up going into the open. Slightly down. Everything, again, is going to trade off those numbers if there's any action in here. You don't have the patterns. This is why I like to watch the futures, because if those doubles did trigger, the doubles bottoms did trigger on the Qs, on the futures, then you could trade the Qs in a similar fashion to that. But if you're looking for the short-term price action today, actually, if it comes back down, then you could finally get a double in the Qs, which would be interesting. But short-term, your key resistance is about 283. And if you want the pullback levels, here's what I'd be watching for. You see it's bounced twice off that 62.5, this 278.79 area. You break below that, you need it to get down to 277, about 70. What's the exact number? Hold on. The nice area to set up, it would be 277.80. You trade back down there. So if it started breaking down, that's my first target I'd use. And then 276.77, roughly. And those would then codify that potential double to the upside. So then we could have a really nice Q setup going into next week if we do get the push lower. That's pretty much where we sit. Let me glance at the spiders. Spiders, pretty much the same story. To see if we set up this, again, 62.5 is held twice. But if we break down on the morning, 374.65 area, then 373.80. You're against this rotation zone. There's the upside play would have to be above about 378.65 just to a return to about 379.60, and then the highs from yesterday. So that's where we sit. Again, don't get yourself into trouble if there's not much to trade. George, did you see my response to your comment yesterday with the ARC stuff? Because I went to the downside. Yes, if I didn't cover the upside targets, they are still valid. Now, if it pulls back below this 75 level, then this potential double's turned into a triple. So those upside targets, which haven't triggered yet, are invalid. Just to cover that again. All right, everyone. I will be on again after the close to do a wrap-up, and it will be a brief wrap-up. But we will have to just assess it because it's what I do. So if you want to join me this afternoon for a little quick session, we'll do it then. Stay safe. Have a good day trading. If you don't have anything to trade, then sit on your hands or go enjoy the day. I'll chat with everyone later. Bye for now.